Hey, everybody. Thanks for joining us today. On today's episode, we have Angela Wyckoff, who is a reverse mortgage all star. We're going to be interviewing her. She works with me at Reverse Loan Solutions, so I get the inside scoop, and Angela and I have a lot of fun together. So, Angela, if you want to take a minute and introduce yourself to our audience of reverse mortgage interested people.
Awesome. I'm Angela. Nice to meet you guys, I guess. And I have been doing mortgages for over 20 years. I know I started when I was 10. And it's just always been in my heart to, help people get their homes. So that's why I started doing reverse mortgages as well, because when I was 13, I had to essentially watch my grandmother struggle to take care of my great grandmother. And that's kinda when it clicked in my head that I just had this, gnawing on my heartstrings about, the senior community.
Wow, I don't think I've actually asked you that story before. I'd love it if you shared. So when you were 13, you really got an attachment to what it looks like at the end of life and an
Yeah.
experience with that?
Yeah, so we had to live with my grandmother, who was the sole caregiver of my great-grandmother, and she just struggled, like, physically even to bathe her and feed her. I mean, I would step in and feed her and help her, and she was in her 90s, and eventually my grandmother couldn't care for her anymore and sent her to a convalescent home, which I don't know if they have those anymore, but essentially when you walk in, you get a brisk, cold feeling, and the air is just still, and people are screaming, and it's just not a good scene. So my great grandmother would constantly beg us to take her home, saying they were trying to poison her. And it's just that's why I work so hard to keep people in their own homes getting care brought to them.
Oh, that's beautiful. And I know some of your family has been involved in this as well. I didn't realize it went back that far, that many
Yes.
generations.
Right?
Wow. What a thing at 13 years old to have to see and experience. Well, I'm sorry you did.
It's
And
okay. It made me who I am today.
I was gonna say it really has created a trajectory that's really beautiful. You have a huge impact on the world. Let's talk about that. All right, so I know you've done mortgages for a very long time. At what point in time did you get turned on to the idea of a reverse mortgage, and how did you feel about it when you first looked into it?
Initially, I was just trying to gather as much information as possible. I started doing it because Brad, our owner, wanted to get one set up for his parents, and I think that was like 5 years ago. And I just kind of saw there was so many ways to tailor it. They're so unique. And that just really sparked my interest even more because of how unique they are and how they can be structured. And I just, want to get the word out and just help people as best I can. I put my own mother-in-law in one. So, it's a really amazing retirement tool when used effectively.
Absolutely. And for the viewers, there is another video with Angela and her mother-in-law, and we're interviewing both of them at the same time. So if you want to see that one, keep scrolling. All right, Angela. So you talk about the tailorability of the reverse mortgage. I think this is a concept that most people aren't familiar with. The TV commercials a lot of this time say "get cash now," and it just kind of feels like a payday loan
Hmm.
type sale, to me at least. And to me, this product is not like that at all. And so when you say talk about the tailorability, can you give our audience just an insight into how you can tailor the various ways they can take funds and what that really means when you say it?
Yeah, absolutely. So, depending on how much equity you have left in the property, um, kind of shows us the different options that are available. Of course, your age is a factor as well. There are times where we can set up monthly payments to come to you for the duration that you live in the property. We can set up a line of credit that you gain additional access to each year. We can offer a lump sum or a combination of all three. So, pretty much we have a conversation, we talk about your goals, and then I do my best to tailor something to meet your goals.
Awesome. Very cool. And in your experience, what's the most common way you see people actually want to take funds?
The line of credit. So I actually had one case where this gentleman called me and he's all like, "Oh, I already talked to somebody. They're giving me 200,000. I bet you can't do any better." And I'm just like, "Well, what's your plan for that money?" And he's all like, "Well, I'm gonna do 30,000 to fix the roof and some repairs around the home, and then I'm gonna put the rest in my savings account and pull out $1,000 a month for my wife's long-term care policy. She had Parkinson's." And I said, "Why would you do that? Why would you pay interest on that from day one?" So he ended up going with me after I essentially convinced him not to pay all that interest, and I gave him the 30,000 at closing, and he was able to get 1,500 a month to pay for his wife long-term care policy and other things. Over the duration of the loan, by age 100, they will have received 478,000 versus the 200,000 they were offered from day one.
Okay, so that sounds mind blowing. I understand the math behind that, but can you kind of say how that works? How can you go from 200,000 today to 400, over 400,000
hmm
in that time period?
So that has to do with each year the value is expected to appreciate by 4%. And then as you get older, the lender also gives you access to more of your equity. So it just accumulates, and by age 100 they would get a significant more. I mean, that's over double.
Yeah. I like to say, because the reverse mortgage is based on the amortization of, excuse me, not the amortization, the life expectancy for the
Yes.
IRS tables. I don't know if this is fully accurate or appropriate, but the way I like to say it is you're kind of betting the bank. Hey, I'm going to outlive what you think I'm going to if you structure it
Exactly.
that way.
hmm
Yeah. What a great save.
I know, it was amazing.
He was going to do the reverse
Life-changing money.
anyways. Oh my gosh, double.
hmm
Double. That's amazing. And it's about the structure. And it takes a loan officer like you who cares, who understands, who says, if I were in your situation, or if this was my mother-in-law, mother, grandmother, this is what I would do. And this is what I would want for them. And you're absolutely right. Why would you pay interest on that
Oh
from
my
day
gosh.
one?
So the first year they were saving over 14,000. It was just astronomical. And I talk about this. I actually talk on a radio show on Saturdays, and just getting that word out there that these are not the loans of the past where people would lose their homes. I mean, you still have the ability to do that, but there's so much more protection in place now.
Oh my gosh, there is. So since you brought it up, I'm gonna go away from my written questions. So how can this is the elephant in the room, right? Whenever we're talking about reverse mortgage, a lot of people kind of get, oh, that's a bad idea. And so why is that? Where does that come from? How can somebody lose a home, or how can they make sure they never lose their home if they move forward with the reverse?
So I talk a lot about the three major rules. You have to live in the property as your primary residence. You can't take the reverse mortgage and then rent out the property or go live in assisted living. At least one borrower has to remain living in the property as their primary residence. The other thing is that you have to maintain the property taxes and the insurance. Banks did not make sure that the borrower would pay those after the loan was funded, and now there's an income test to make sure that the borrower can maintain the property, the taxes, the insurance, the HOA, the utilities. And then thirdly, you have to maintain the property itself. The city can't come by and condemn it. You have to actually maintain the property, because eventually the loan has to get paid back. And upon death, your heirs will have the option to purchase the property at 95% of the market value at the time. Or if they're age eligible, maybe they'll refinance it into their own reverse, or they'll sell the property and keep whatever proceeds are left.
That's a really good way to say that. And I want to kind of spliff off of the maintenance part. So I had a client who just called me yesterday, and she was a long time ago client. She's had a reverse mortgage for like, I don't know, 9 years at this point. And she goes, Christina, I love my reverse, but the maintenance on this home is just getting too much. And I said, well, that's a real concern. She has an actual
Yeah.
home with a yard, and the pipes and things were going wrong. And so now we're looking at with this client, what if we sell? She's going to have a ton of equity still because her appreciation just went through the roof, even with the reverse growing, right? The
hmm
loan balance, she didn't have to make payments. So it did grow over time, but it didn't matter because her property appreciated so much. So now we're looking at, okay, let's sell this house and instead help you buy a condo with a reverse for purchase in a much smaller price range so that she's going to keep some of the cash to pad her retirement. And that sort of thing, I think people just lose sight of, that the maintenance sometimes is just, it gets to be too much.
That's why it's so important to speak with someone who knows how to structure these loans, because we have a system in place where we actually talk to the borrower about their existing property. Is it a 2-story property? Are you going to be able to climb those stairs at 95 years old? Is it a 5-acre property? Who's going to cut the grass? I mean, we talk about these things up front to make sure that that home is suited for you for the rest of your life.
Absolutely. I think our sales questions are really thought provoking, if I do
Amen.
say so. All right, let's get to some of these. So, I know you encounter this a lot, and most people have misconceptions. So, what are the most common misconceptions or myths that you see in your practice?
I see this all the time. The bank is going to own my home. The bank does not own your home. You own your home just like as you would with any other mortgage. This is a mortgage placed against the property. The only difference is there's no required mortgage payments and the interest, gets tacked onto the balance. So that is the hugest thing that the obstacle that I have to keep reassuring people, that the bank does not own your home. You're not giving away your equity. You are, essentially trading it for living there, essentially rent free, until you don't live there anymore.
Great answer. Yeah, absolutely. I mean, everybody wants to keep maintain ownership of their
Hmm.
home. And that's important too. People say, "Oh, I don't really own it. The bank owns it," when they're talking about forward mortgages too.
Yeah.
And it's like, well, that's not actually the mechanism. You're on title. You are the owner. This is just a financing instrument.
Hmm.
So clarifying that, I think, is huge. I think, there
Yeah.
are programs, I charitable life estates, I think is the word, where
Hmm.
you actually do
Y-
sell ownership, but
Actually,
that's
I had
not.
a client who did that, and they came to me, and there was just no equity left. But yes, he did give a portion of his actual equity away.
Yeah. And that to me is like
That's
giving up
scary.
control. No. Yeah. You can do the reverse and then leave the home once you pass to the charity
Yeah.
rather than a charitable life estate. That just make sure that you have control of it, you know.
Hmm.
And not everyone's going to be able to stay in their home till they pass. I wish everyone could, but sometimes that's not possible. Okay, so you talked about this a little bit, but can you share some success stories or examples of how a reverse has changed someone's life? It's a big claim, right? We've changed
Yes.
people's lives. It sounds too good to be true. Let's hear about some situation where you actually did that, where it's not too good to be true.
Gosh, there's so many to pick, but I have this one gentleman who insisted on coming into the office to see me. Now, of course, this was just off the coattails of COVID, and fortunately, I was able to meet him in the office. But he's all like, "I get these mailers, and I get this," and he lost his wife to cancer. So he went from 2 incomes to one, and his mortgage payment was 2250. And guess how much his retirement or his Social Security was? It was 2250. So we were able to get him a reverse mortgage. Not only did we get rid of his mortgage payment, but we gave him money to make repairs to the home and catch up on the bills that he'd constantly been behind on. So that was life changing for sure. And he called me a month later. He's like, "I can't believe you got this done for me." So it's huge. People don't realize Social Security is not as comprehensive as it should be, and when you lose one of 2 incomes, that's a huge impact. And getting rid of that mortgage payment gave him his life back. Now he can go golfing. That's what he said he wanted to do. He wanted to go golfing.
And you know what? He should have every right to go golfing as much as he wants. That's awesome. I think that's a big thing. People don't realize the income changes when somebody
Yes.
passes. I've had clients where it was more of a preventative measure where they
Mm,
put the reverse mortgage in place because they knew they were going to pass and they didn't want their spouse to have to deal with the finances and
yep.
that big change, which of course they still do have to deal with them, but putting the reverse in place, ensuring that income, tax-free income, by the way.
Yes. Very much so. That one client with $1,500 a month. I mean, essentially got a free long-term care policy for his wife with Parkinson's.
Oh, that's so
And
good.
I had one where the financial planner was warning this borrower that if they didn't do something in 4 years, they'd run out of money. She never worked a day in her life. She had an accident, and essentially the what she got in the court case has been keeping her afloat. She never had to work, and the financial planner was all like, "Yeah, in 4 years, you're going to run out of money. You need to do something." She was sitting on a free and clear $1.8 million home.
Oh, thank God.
So when
Wow.
she bought it cash for 400,000. And then we were able to leverage the equity in her home to, structure some payments for her and recoup some of the money that she had lost in the market.
Oh, that's huge. All right, another
Yeah.
misconception I'm going to jump right on. So if the value was 1.8, did she cash in all 1.8 and you guys gave her 1.8 million because that's what her value was?
No, so the bank only gives you a certain percentage of the equity based off your life expectancy. So, people think it's about 50% and not always true. So I wouldn't use that figure. It's definitely important to just have the conversation and run the numbers. I definitely wouldn't want to speak out of turn. And of course, everybody's situation is different. Sometimes people have a younger spouse, and then that will give a little bit less of the equity to them as well.
Yeah, good point. As well as interest rates.
And
Interest
yes,
rates
the
go up
interest
or
rate makes.
down and the numbers
Hmm.
change again. Yeah. So for those of you watching, if you've ever talked to one of us and you're like, just give me the numbers off the top of your head, that's not how it works, guys. And you don't want somebody to do that because you'll get tied to that number. I had a client one time who called and he said, "Oh, I know I can get 70,000." I was like, "Well, okay, when was that?"
Right.
And the numbers change so immediately. It's just a snapshot.
Hmm.
All right.
I call it
So
an etch-a-sketch or numbers in the sand.
that's a really good way to put it because it really is like the tide comes in, the rates change, the values change, your age changes, you get married, you get divorced, the numbers all change again. It's not like a
Yep.
regular mortgage where it's like, 80% loan to value. It doesn't work that way.
Hmm.
We don't even use that language.
Nope.
All right. So if you could change the American retirement in one way, what would it be?
Ooh, that's a deep one. Um, I would probably just do a better job of just education. People, like the Social Security sends all these mailers out and says, be prepared. You're hitting retirement age. These are the things that you should do. Well, they should include home equity. That would be huge, including the fact that they can leverage their equity. And instead of, struggling each month or I had I had a gentleman or a woman, I talk on the radio on Saturdays, and he said that she was essentially buying food for her cat instead of herself, and she was sitting on a free and clear property. So people are house rich and cash poor, and I think that is a huge um, misstep on the government not to, since they back most of these, not to promote them for people of retirement age.
That's a really good point. So it's not necessarily a government benefit program like Social Security, but how is a reverse mortgage a government associated product?
So FHA insures the HECM product. And then, of course, there's proprietary products, which are more of a jumbo, like if you have a larger valued home. But the FHA does insure a good majority of these products. And that's why I think they should include it with, like, here, sign up for your Social Security and take a look at this.
That would be great. If one
Right?
section for retirement talk to the other section for retirement. It's like we're serving the same people here, guys.
Yep.
Yeah. I think the awareness is really, really the key factor. And I don't think you need to do a better job. I think you're doing an amazing job. I think we need to do a better job as the whole community in the
Hmm.
country to really make this a known thing and truly for retirees to look at these options and sit there and understand how it works before saying, oh, no, that's not for me.
Hmm.
Might not be for you, but do you really know? Have you seen your
Yeah.
numbers? Have you
And it doesn't
considered?
cost anything to have a conversation. It's not
Right?
like you're going to lose anything. Just let's take a look. If it fits, it fits. And if it's not, I'll tell you that too. I'm
Right.
not going to put somebody in a loan that doesn't pencil out.
No, and we're not going to chase people. That's the biggest thing I see is seniors particularly are afraid to submit an email or a phone number because they're afraid of getting hounded because let's face it, there are companies out there that will hound them.
Mm-hmm.
But if you go with an actual professional advisor like we are, we don't have time for that. If you're
Nope.
not a fit, like we're not going to chase you. Bye. Hopefully you'll come back when you're ready. Okay, so if people want to hear you on the radio, how can they do that?
Oh, KIDO posts it every Saturday, and then they air the show Monday nights at 7 p.m. But it's the initial show is 11 o'clock. I think it's Mountain Standard Time. And yeah, you can hear me on the Safer Money Specialist with Ron Grant, his show. Or I do post it on my Facebook, and it's a public link where you can go and click on any of them and listen to my show. I've also been on the podcast for oh my gosh. It's called Aging in Place, Using Your Home to Stay at Home. You can look that up on YouTube. And it's just, these are places where you can go to find the information where you feel in a secure area in your home and you can just look at it and say, gosh, I have more questions. I need to reach out. Or, you know what? It's not as bad as I thought. I need to reach out.
That's a common one. It gives me such whiplash when you have somebody on the phone and it's like, oh, reverse mortgages are terrible. I'm only here because my son said I had to listen to you. And then 20 minutes later they go, oh, this sounds too good to be true. Common. No, it's not too good to be true. And it's also not terrible. It's somewhere in the middle.
Yeah, exactly. And it's not for everyone. So having that conversation is just critical. Just start the conversation, and if it works, it works, and if it doesn't, we're not going to force you into something. We're going to make sure that you are educated and give you all the information that you need, and if you need to move forward, we'll move you forward.
Perfect. Well, thank you so much, Angela. For anybody who wants to work with Angela, there's a link below this video. Click it, submit your information, or just call her directly. She is a joy to work with and specifically has a wealth of knowledge about the aging in place landscape, which, in my opinion, a reverse mortgage can really be the financial foundation for aging in place beautifully. So thank you, Angela. Is there anything else you want to tell our audience before we wrap it up?
Just education is key. Just if you or a loved one are in a position where maybe you're not struggling, we get a lot of people who don't need a reverse mortgage. They just want it for the rainy day. And for my own mother-in-law, I know I wasn't physically nor financially able to care for her, so we put a reverse mortgage on her free and clear property, and now she has a growing line of credit for when she needs care.
Oh, that's so beautiful. And if you want to see that interview, again, that is in this list. Go find it. All right. Thank you so much, everybody. Thanks for tuning in. Watch the next one. We've got more coming at you.